Good Tuesday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks hitting new records ahead of the Fed's rate decision. President Trump's governor pick, Stephen Miran, is confirmed, but his bid to fire Lisa Cook is blocked. Earnings shake up. The SEC says it is prioritising a proposal by Donald Trump to change company reporting to once every 6 months from the current quarterly results. Plus, Google announces a £5 billion AI investment here in the UK, part of a $10 billion deal package Bloomberg understands will be unveiled during President Trump's state visit. So fresh records across US stocks by the end of the close yesterday on those expectations around the easing expected from the Federal Reserve, of course, kicking off on Wednesday. That is the expectation. European stocks then, in terms of the futures picture, after a strong session yesterday across the European equity space, looking to build on that optimism today, pushing higher just by 0.1%. But again, in the context of the almost global record highs that we're seeing, this continues to grind higher for equities. FTSE 100 futures pointing to gains of 8 points. S&P futures again after closing higher around 0.4% higher yesterday and above 6,600 for the first time. A fresh record for the S&P 500, looking to build on that today, up 5 points. Nasdaq 100 futures looking to add 29 points as well. Alphabet, the company, reaching a market cap of more than $3 trillion yesterday. Let's split the board and have a look cross-asset. Then we continue to focus on US Treasuries, of course, particularly at the front end as we build up to that decision for the Fed. On the 10-year, you are closing in on 4% right now. Yields have been grinding lower, of course, on these expectations around Fed cuts. 4.03 right now on the benchmark. The pound at 136. We get data on the UK in terms of jobs data and wages at 7 a.m. UK time. So watch the pound, currently up 0.1%. But that's more about dollar weakness, at least right now. Gold, fresh record highs for the yellow metal. How many times have we said that this year? Gains of more than 30% year to date and up 0.1% in the session today. And Brent crude at $67 a barrel, up 0.2% on oil. Briefly checking in on the Asian session where you've had fresh records for Asian stocks and across the benchmark, the MSCI Asia Pacific up 0.7%. Again, with the handoff from the positivity coming through on the US session. Domestically, China, the CSI 300, a little softer by 0.4%. Japan is doing well. Stocks there up 0.5%. And the Japanese yen at 147, a move of 0.2%. Now, a US appeals court has blocked President Trump from removing Fed Governor Lisa Cook from her post, while a lawsuit challenges the dismissal procedure. That decision came as the Senate voted to confirm the president's economic advisor, Stephen Miran, to join the central bank board. And that means both governors could be involved in that crucial Fed rate meeting beginning later today. Bloomberg's news desk editor Balazs Pence joins us now. So another dramatic day, Balazs, in terms of the movements around members of the Fed, Lisa Cook, Stephen Miran, both potentially at this all-important meeting to discuss rates. Where do things stand right now, Balazs?
Yes, good morning, Tom. It looks like the haze is clearing a little bit, at least when it comes to the composition of the Fed board when that all-important rate meeting starts tomorrow, U.S. time. This is a date, of course, that investors have had circled for months as the potential start of an easing cycle by the Fed. What happened in the Lisa Cook case is that an appeals court upheld a lower court decision, a temporary injunction, which lets her remain on the board while her case works its way through the court system. The president still has the option of going to the Supreme Court for an emergency ruling on this one. Time is very, very tight, as we know, but it does look like she's probably going to be on the board. Stephen Miran got emergency, urgent approval through the Senate, and so he will be sworn in and will be part of this meeting. How he will vote, what he will advocate for, we don't know yet. The market obviously expects a 25 basis point cut. We do think Stephen Miran will probably be a dove. But as far as this particular meeting goes, it looks like the writing is on the wall and there's pretty broad consensus of which way this will go.
Meanwhile, President Trump pushing for at least a review of quarterly earnings, suggesting that quarterly earnings are problematic, that maybe they should be extended to 6 months. And the SEC then and the Securities Exchange Commission say that they are prioritising this. This is potentially hugely significant, Balázs. What do we know about where this process is?
Well, the president is championing a long-standing grievance of a lot of corporate leaders and indeed investors who have complained that quarterly reporting is expensive, it ties up valuable resources, and it encourages very short-term thinking by corporate leaders who are always prioritizing the next earnings beat. On the other hand, we have people who see quarterly reporting as a great achievement of the push for corporate transparency in the U.S., which has been in place since 1970. But we know for sure that the SEC has a leader who agrees with the president and has criticized the requirement for quarterly reporting, and the SEC is prioritizing this request to at least study a potential move to a biannual reporting. So this does look like something that might actually happen, or at least is gaining traction in the market right now.
OK, we continue to monitor that story, whether we go from quarterly earnings to every 6 months or twice a year. Bloomberg's Balázs Pence, thank you very much indeed, with the update on the Fed as well. Talking of the Fed then, stocks hitting another new record ahead of the Fed's meeting, above 6,600 on the S&P 500. $14 trillion rally since April. Let's bring in Bloomberg's Valerie Teitel right now. Valerie, is it all about the Fed for stocks?
Well, it's been a positive earnings momentum. Declining rates have definitely played a factor into the equity market rally, with the S&P 500, as you mentioned, closing above 6,600 for the first time ever. And Tom, we are less than 6% away from crossing the milestone 7,000 mark. We have 73 trading days left in the year. Let's see if we can get there. But it's also been the tech trade really taking the wind into the equity market. Take a look at the NASDAQ. In the last 9 sessions, we're on a 9-session winning streak for the broader index. It's its longest since 2023. No other epitomized better by Alphabet. A really astonishing rally in the month of September. Alphabet has rallied 20% since September 1st, adding $500 billion in market cap in just a few weeks. And yesterday became the 4th company to cross the $3 trillion mark when it comes to market cap, the 4th U.S. tech company to do so. But as I mentioned, it's also been Treasury yields declining. That's been helping out the equity market as well. It's not just yields declining in the bond space, but we're actually seeing implied volatility in the Bank of America's MOVE Index hit its lows since 2022. If you can flip on, you can just talk about this for one moment. This is really important, Tom, because, yes, there is a lot of things still up in the air on the Fed decision on Wednesday, but the market is becoming more and more convinced that an aggressive easing cycle is about to begin. So we're seeing volatility decline in these yields test year-to-date lows. OK,
Bloomberg's Valerie Teitel, thank you very much indeed on fresh records for U.S. stocks. Meanwhile, President Trump says he will have a phone call with China's Xi Jinping on Friday. That's after American and Chinese officials met, of course, in Madrid, reached a framework deal on keeping the TikTok app running in the U.S.
I'm speaking to President Xi on Friday for confirmation of that. And, frankly, more importantly, a big deal. And we've had very good meetings. As you know, we were in Europe, our people, Scott Bessent and Jameson Greer and others. And it was a very big meeting with China. And, they're treating us with respect. We treat them with respect, too. But it was very successful.
OK, let's bring in our China economy and government editor then in Hong Kong, Alan Wong, who's been watching all of this for us, of course. Alan, were these talks essentially, President Trump was talking about at least framing this as potentially a bigger trade deal that he's looking for from China. But the talks in Madrid, were they essentially focused then on how to resolve the TikTok conundrum?
Yeah, exactly. The talks, the main outcome from the talks so far has been about TikTok, in that they reached some sort of a consensus on a framework for a deal, which is another way to say that they haven't actually signed a deal on TikTok, but they are getting closer. And as you suggested, this is all part of what could be a bigger deal, as Trump would hope, between the U.S. and China. And that deal could entail many other elements. We know, for example, that when after the first day of meeting, U.S. Treasury Secretary Scott Bessent said that the Chinese came with aggressive asks. and that the two sides discussed matters such as the trade imbalances between the two economies. So any big deal would have to include elements of those other issues that arguably are thornier than the future of the U.S. operations of TikTok. And even if we're just talking about TikTok, there are lots of uncertainties about what that deal would entail. There are questions such as whether China will maintain some stake in that new U.S. operation of TikTok, what role, if any, the U.S. government is going to play in that entity, and who's going to own or control the technology that makes TikTok so popular and addictive. So those questions are unresolved, and we've only heard that they are getting closer to a deal and have reached some sort of a consensus or framework on a deal.
OK, yeah, and it's important to underscore that those questions remain unanswered. So we'll look for some more detail on that. Meanwhile, Alan, as you and the team look ahead to this call between the two presidents on Friday, what are you going to be watching for?
I think it's helpful to see those talks and even a potential meeting between Xi and Trump next month as sort of checkpoints of how any negotiation between the two countries are going. If the trade talks this week didn't go well, or if they completely broke down, I think you can imagine that a call between President Xi and President Trump would be less likely, not to mention a meeting in person. The TikTok deal would be a good thing for the leaders to announce as some sort of a tangible outcome of their call or their meeting next month. But for the call this week, we think that any material outcome would be limited because, as Scott Bessent himself said, that they talked about trade, but they weren't able to reach an agreement on that.
OK, Bloomberg's China economy and government editor, Alan Wong. Maybe we shouldn't set our expectations too high then ahead of that Friday call. Thank you for the context on both fronts, TikTok and what to expect from that presidential call. Some breaking news when it comes to the French lender, BNP Paribas, of course, very active in terms of an investment banking space. The business and the bank then reconfirming its net income targets for 2025, targeting in excess of 12.2 billion euros. So reconfirming that net income target for 2025, and it confirms as well its ROTE, its return on tangible equity target of 12% for 2026. It is also targeting, BNP Paribas targeting a return on tangible equity of 13% in 2028. So some updates there coming through from the French investment bank BNP Paribas. Here's what else to think about in the day ahead. 7 a.m. UK time. We're going to get that jobs data, then wages and jobs claims from the UK, as there are signs of softness and increasingly a sense that maybe the Bank of England, when it comes to inflation, is going to be on hold for longer than maybe some had expected. That data dropping at 7 a.m. UK time. We'll break that for you, of course. And at 1:30 p.m, the focus switches to US retail sales. Important, of course, ahead of the Fed decision, which for many is locked in. But we'll get a gauge of the consumer in the US at 1:30 p.m. UK time. And later, President Trump arriving here in the UK for that state visit. The second state visit, of course, for President Trump, kicking off later this evening. All the pomp and pageantry from Wednesday with the King, of course. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. And there's the breakdown of the latest moves in terms of the Federal Reserve. Lisa Cook staying in place, at least for now. And Miran pushed through the Senate, and he will be playing a role at that meeting on Wednesday. Coming up, US Secretary of State Marco Rubio refraining from criticising Israel over that missile strike on Qatar. That's as he heads to Doha, of course, which was struck by Israel. We'll bring you the latest next. Plus, later in the programme, I'm going to be joined by the Executive Vice President of the Philippines' biggest port operator, one of the biggest port operators in the world. We're going to discuss the impact of US tariffs on supply chains and global shipping. Really, someone who has the finger on the pulse of global trade. That conversation coming up at 6:40 a.m. This is Bloomberg.
Tomorrow, the Fed decides. The real debate is going to be about the outlook.
The economy is slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Welcome back to Bloomberg Daybreak Europe. Now, US Secretary of State Marco Rubio has refrained from criticizing Israel over its missile strike on Qatar, saying the priority is to make sure Hamas surrenders and disarms to end the war in Gaza.
We are focused on what happens now, what happens next, what role can Qatar play possibly in reaching an outcome here that leads not just to the end of this hostilities, not just to the release of all of the hostages, both living and deceased, not just the disarmament and elimination of Hamas, but also a better future for the people of Gaza, which isn't possible as long as Hamas exists, which isn't possible as long as 48 hostages are being held.
Well, Rubio is now set to visit Qatar. The tiny Gulf state, of course, also hosted a summit of Arab and Islamic nations in the hopes of presenting a united response to Israel's attack. Joining us now is Bloomberg's Jumana Pasechi in Dubai. So no criticism then, Jumana, direct criticism from Marco Rubio for that attack on Doha by Israel, pretty unprecedented attack. How is that likely to play out when he lands in Qatar?
Yeah, I would just modify that and say no public criticism. We don't know what went down behind closed doors, but what the Secretary of State, Marco Rubio, did say publicly is that we're focused on the now and we're focused on what happens next. And we understand that the two, so Marco Rubio sat down with the Israeli Prime Minister. They made that joint press conference yesterday, but they did discuss the path forwards towards ending the Gaza war and the release of those 48 hostages, 20 of which are still thought to be alive. Now, obviously, the attack on Doha very much still on the minds of Arab leaders. And as we speak now, the Secretary of State has just boarded a flight on his way to Doha, the next stop of his tour, and what he hopes would be an opportunity to mend over some of the diplomatic damage that was caused by the attack on Doha last week, with the Qatari side and also many Arab Gulf states believing that the U.S. perhaps could have done more to honor those security guarantees that have so long existed between the two nations. But before he boarded, the Secretary of State Marco Rubio did say if any country can mediate Israel-Hamas, it is Qatar. Therefore, they're still very much depending on the U.S. to continue, on Qatar, I should say, with those mediation talks. But all of this is happening at the same time as Israel is amplifying its push into Gaza City. And from our own reporting, we understand that the U.S. has actually given tacit approval to Israel to continue with that Gaza City offensive, with the hope that perhaps this might incentivize Hamas to surrender. But there are no signals yet from Hamas that they are actually willing to surrender at this point.
OK, Bloomberg's Jumana Pasechi, our global, of course, our editor, or I should say our anchor for Horizons Middle East. I'll get it right eventually, with a focus, of course, on that visit then by Marco Rubio to Qatar and how that reads across, of course, to that military intervention by Israel into Gaza City. We continue to watch developments, of course, on the ground, both in Gaza and in Qatar. Thank you. Meanwhile, Donald Trump says the US military has hit a second boat accused of carrying drugs from Venezuela. He shared a video that you can see on the screen right now on Truth Social, which showed a boat in unidentified waters bursting into flames after being hit. The US president says he is prepared to strike drug cartels on land as well as at sea, but the legality of the strikes, which Trump says took place in international waters, has been questioned. US President Trump, meanwhile, is bringing a $15 billion defamation and libel lawsuit against the New York Times. In a post on Truth Social, the president has accused the publication of becoming a, quote, mouthpiece for the Democratic Party, citing its endorsement of former presidential candidate Kamala Harris, among other concerns. In his post, he also references previous litigation with other news networks, including ABC and CBS. Later in the show, a growing number of economists now think the Bank of England is done cutting interest rates. We find out why at 6:30 a.m. UK time. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the president of Apollo Global Management sees plenty of investment opportunities in Europe as governments struggle to meet industrial spending demands. Speaking exclusively to Bloomberg's Francine Lacqua, Jim Zelter said he is particularly interested in Germany.
This is the most unique period of time in Europe. For the first time in decades, I think there's the good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogue. So very exciting time. It's not a clear picture. And like usual, Europe has many different stories in terms of the continent and each country, what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several hundred billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, around the globe right now there's this massive global industrial capex needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. We find ourselves in a situation where, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions, and they have great ambitions but a limited budget to provide that. So I think as the world of finance continues to evolve, certainly we've been quite active in Germany. Yep. We've been quite active in France. Athora in their recent announcement of the purchase of PIC in the UK, which is a different conversation. But I think we find ourselves, particularly in those two countries, and yes, some in Italy and some in Scandinavia as well. So it's fairly broad brush, but these are massive ambitions from which to fund.
Apollo's Jim Zelter speaking exclusively there to Francine Lacqua. Now to some of the stories making the news this Tuesday. Shares in Webtoon have jumped almost 60% in extended trading after Disney announced plans to share its comics on a new digital platform and app in partnership with Webtoon. Disney says it will acquire a 2% equity interest in the startup, expanding a partnership announced a month ago. More than 35,000 comics will be available on the new service, which will be built and operated by Webtoon. And Bloomberg understands that the alarm company Verisure is considering launching an IPO in Stockholm as soon as this week in what could be Europe's biggest listing in 3 years. Sources say the offering could raise €3 billion, making it the largest IPO since Porsche in 2022. Plenty more coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks hit new records ahead of the Fed's rate decision. President Trump's governor pick, Stephen Miran, is confirmed, but his bid to fire Lisa Cook is blocked, at least for now. Earnings shake-up. The SEC says it is prioritising a proposal by Donald Trump to change company reporting to once every 6 months from the current quarterly results. Plus, Google announcing a £5 billion AI investment here in the UK. It comes as US President Donald Trump is set to unveil deals during his state visit that Bloomberg understands could total more than $10 billion. Let's get to the markets then. The S&P 500, another record high, above 6,600 by the end of the close yesterday. Gains of around 0.4%, and US futures looking to build on that today. It is about rate expectations, and arguably it's about the signalling beyond September for this Federal Reserve, with 25 basis points more than baked in right now by these markets. European futures pointing to gains of 0.1% after a pretty solid session, actually, on Monday for European stocks. FTSE 100 looking to add 6 points. We have wages and jobs data coming out at 7 a.m. UK time. We'll give you the context shortly. S&P futures then looking to add to that, up 0.1% given the gains yesterday. Nasdaq 100 futures looking to add 37 points. Alphabet now above $3 trillion in terms of market cap, and that was one of the catalysts. Let's flip the board and have a look cross-asset. We continue to keep an eye, of course, on treasuries. They've continued that rally. Today stabilising, but close to that 4% level on the US 10-year. Do you cross below that following the decision from the Fed on Wednesday? The pound in focus with the data upcoming, of course, 136 right now. A little stronger for the pound on dollar weakness, up close to 0.2%. Gold at fresh record highs for the yellow metal, up 0.1%. And Brent oil prices higher in the session, up 0.1%. So Donald Trump expects to announce economic deals worth more than $10 billion US dollars during his trip to the UK. That is according to senior officials in Washington. Google has already announced a £5 billion AI investment in the UK ahead of that state visit. For more, let's bring in Bloomberg's Rollison Matteson, who's been looking at all this for us. So the two leaders, they're going to be talking about trade deals, 3-day visit. It starts really in earnest tomorrow, doesn't it? But President Trump will be arriving here in the UK tonight.
Well, that's right. So it really does start tonight, because as soon as Donald Trump lands, he tends to start talking. So it'll be interesting to see what's on his mind when he does, whether it's UK affairs and the relationship with the UK, trade, investment and so on, or whether it's matters further afield. As you were noting, we're coming into a pretty busy week, including a Fed rate decision and, of course, possibly his call with the Chinese president on Friday. So maybe a lot on his mind when he lands. But as you say, a lot will be around the business and trade and investment side. So you've got the idea that he's going to announce $10 billion worth of trade cooperation agreements, and that's everything from cooperation around defence technology, for example, also science and technology. We know there's going to be this deal around nuclear, for example. So there's a lot on the table, and the executives are all going to be meeting together as well with Trump and with Keir Starmer, the UK Prime Minister, later this week. So pushing the idea of doing a lot of business together, and that's going to benefit the US as well as the UK. That's going to be the narrative, really, for Trump. Is this going to be good for business for the US? The question is, can the UK government keep the focus on that as the week goes on?
Well, to that point, does all of that get overshadowed by questions, continuing questions around how the Prime Minister has handled the appointment of the former US ambassador, of course, given his proximity to the late sex offender, Jeffrey Epstein? To what extent could that derail all of this, or at least overshadow all of this?
Well, certainly it's going to be awkward going into it, because it's possible that Keir Starmer will face hours of debate in Parliament on this issue, or in the run-up to it. And more questions about what he knew, what he didn't know, when he knew, because, of course, he gave quite a strong endorsement of Mandelson even after his Foreign Office was aware of some of the extent of these emails that Bloomberg unearthed in terms of showing the relationship between Mandelson and Epstein. And so questions around that. Also possibly awkward for the Prime Minister is whether Donald Trump decides to weigh in about social media regulation in the UK. Of course, in the aftermath of the Charlie Kirk killing in the US, does he again turn his eye to the UK and say, you guys are over-regulating social media, you're penalising people for comment on social media? That's always been in the crosshairs of some of the Conservatives in the US. Does that come up? I mean, there's a lot of risk here for Keir Starmer in terms of keeping the conversation where it needs to be going. And in a minute, Donald Trump potentially going in a bunch of different directions. And that narrative that's just starting to bubble up is, Starmer possibly going to face a challenge at some point? Is he going to be the Prime Minister come this time next year?
It's going to be fascinating to watch, isn't it? And whether or not the Prime Minister can rewrite the ship at the end of this week. Ros Mattison, thank you very much indeed on that state visit and what to watch, trade deals, but also the conversations and the potential hurdles for the UK Prime Minister. Now, a growing number of economists, meanwhile, think the Bank of England is actually done cutting interest rates because of a recent rise in inflation. It's not a view shared by all economists and traders who still expect more rate cuts. For more, I'm joined by Kit Rees, editor of Bloomberg Markets Today. Kit, thanks for joining us bright and early. So how are the wage data, how is the inflation data as well tying into views around the BOE, which of course comes through with its decision on Thursday?
Yes, it's a really big data week, a very exciting week for us here in the UK. So inflation is really key. The Bank of England is on a mission to bring it down to its target of 2%. But inflation has been very persistent. The UK is an outlier amongst developed economies. So this is really important for the Bank of England to get it under control. So we're getting labour data later today, and wage growth is really important because it shows whether inflation is feeding through into employees' remuneration. So overall, the labour market looks like it's been softening. We've had private sector surveys recently showing that starting salaries have been coming under pressure. So this shows that perhaps inflation could be moderating there, but this is still yet to be seen. So we'll have to get the official statistics later today, so to get a full read on the situation.
What concerns specifically have the BOE and members of the NBC been pointing to when it comes to this economy and the trajectory of inflation?
Yeah, inflation is the big concern. So we had the August meeting where we had this unprecedented historic split and a revote, which shows that there's a lot of division amongst the members of the Monetary Policy Committee. Then we recently had comments from Governor Andrew Bailey saying that, the timing of future rate hikes is uncertain, and he had a more of a cautious tone and, casting the future rate hikes into uncertainty. Then we had more hawkish members of the Monetary Policy Committee, like Deputy Governor Claire Lombardelli, Megan Green, raising concerns over food prices because these are more salient for consumers. So, there's lots of worries at the moment about the labour market, inflation. What they don't want is a situation where we're seeing a stagnating economy, but inflation is high. So this is really key for the Bank of England.
Yeah, and really to your point as well, that just to what extent the inflation story in the UK has diverged from Europe, where it's at 2%, here in the 4%, and in the US, where it's around 3%. Kit Rees, co-editor of Bloomberg Markets Today, on a busy week for Kit and the team, of course, with that BOE decision. But before that, the data that crosses on wages and jobs at 7 a.m. UK time. Now, some of the stories making the news this Tuesday. Bloomberg has learnt that the Italian government is working on a preliminary plan to raise an extra 1.5 billion euros from domestic lenders. The plan would involve postponing banks' tax deductions in 2027. That would contribute 3 billion euros to the budget over the next 2 years. Italy has already resorted to freezing the so-called deferred tax assets for 2025 and 2026. And the Bank of France has trimmed its growth forecast for the next 2 years, underscoring the challenges facing the new Prime Minister, Sébastien Lecornu. The French central bank says growth for 2026 and 2027 will be 0.1 percentage points lower than what it forecast in June, citing downside risks from uncertainty around getting a budget passed. And Swiss lawmakers have voted against a second attempt to delay stricter bank capital quality rules. An attempt to bundle the legislation with a broader reform package was struck down, enabling the smaller bill to take effect in 2027. The rules update how lenders quantify intangible items such as deferred tax assets and in-house software, and will lift UBS's capital requirements by some $3 billion. The broader reform package, which includes a much larger $23 billion hike, will come into force from 2028 or 2029. The European Central Bank Governing Council member Martin Kocher says officials stand ready to react to changes in the economic data if inflation risks for the region are quite balanced. At the moment, the new Austrian Central Bank governor spoke to our Lizzie Burden at a Bloomberg event in Vienna.
I think the risks are more balanced now. The projections more balanced now than a couple of months ago. That's important.
Are they tilted
in one direction more than the other?
That's a difficult thing to assess. I think you always have the comparison between different points in time, and they're more balanced now. And personally, I think they are quite balanced in terms of upward and downward potential of inflation. And you've seen the projections. Inflation in the euro area, they are actually pretty stable. That's actually remarkable. Also, the GDP projections, they were stable in comparison to the spring numbers. Given the level of uncertainty, it's actually it is surprising that we see the stability, and that's also the reason why we said, look. We shouldn't pre-commit to anything. We don't know what's going to happen. Perhaps the stability is just fooling us a bit. There's a meeting-by-meeting approach. There's no pre-commitment. We look at the data at the meeting and we are ready to respond. But if there's no change, why should there be any response? At the moment, we are fine where we are.
But you revised down the inflation forecast for 2027. We wonder whether that should be taken as something significant, if that tells us that the risks are to the downside.
So very, very slightly. So the revision down, we also up. There was a revision upwards for 2025, a slight downward revision for 2027. To be honest, as an economist, I did forecasts and projections myself. We shouldn't over-engineer that. The precision, especially for a 2-year projection, once you have the status quo assumption, that's fine, but things change a lot. So. There is no indication by the projections that anything changed in terms of that's my reading of it, in terms of the medium outlook. But of course, given the uncertainty that we are facing in general, there might be changes quickly.
Well, markets are currently pricing less than a 50% chance of another cut over the next 12 months. Is that about right?
Markets are not always right, of course, but again, this was a point prediction that you're mentioning. Actually, in the end, the uncertainty is so high that we are facing in different dimensions that I wouldn't bet on that. There might be changes, but who knows?
So keep your powder dry.
Keep the powder dry. Be vigilant. That's important. Be vigilant to all the risks. I'm not downplaying the risks now, but I'm also not over interpreting anything that happens. Meeting by meeting approach is, in my view, a very good way to assess the current situation.
European Central Bank Governing Council member there, Martin Kocher, speaking, of course, to Bloomberg's Lizzie Burden. Coming up, I'm going to be joined by Christian Gonzalez, Executive Vice President of one of the biggest port operators in the world. We're going to be discussing how US tariffs have changed global shipping and supply chains. That is next. This is Bloomberg. Welcome back. So President Trump's tariffs, of course, have had a huge impact around the world, affecting global trade and shipping patterns. Despite the disruption, it's been a successful year for one of the world's biggest port operators, Manila-based ICTSI, with shares up 27%. The Executive Vice President, Christian Gonzalez, is with us this morning. Christian, thanks for coming in bright and early to the London studio. I know you're going to be meeting investors in London whilst you're here. And we want to get your view, of course. You have this touch point, the finger on the pulse of global trade. What has the impact been on the business? And we've seen that stock gain, despite pretty remarkable, pretty counterintuitive, despite what's come through since April. What has the tariff impact been on the business?
Thanks, Dom. And first of all, good morning. Thanks for having me. The year started off pretty well for ICTSI, 11% up in the first half, despite what we all read in the newspapers. Reality is somewhat different. I've seen the numbers for our peers, and they're kind of aligned with that, the high single-digit, low double-digit volume growth rate for the year. And I think what has really happened is that Chinese exporters, in particular, have decided, when all this noise was out there, that they needed to find alternatives to the, let's call it the easy U.S. market, right, which they had a foothold in for a long time. And I think it's best represented by a chart I saw from Julius Baer the other day, which indicated first half 2025 versus first half 2024, a big change in Chinese exports to the U.S. I think it was down $25 billion or something like that. But it also showed a dramatic increase in Chinese exports to ASEAN, where we're, of course, very well placed, being from an ASEAN country and now just having invested in another terminal in Indonesia. There's also been significant improvements from Chinese exporters into Latin America, where we're also quite big, and into Africa, where we're very focused on growing.
So this is shifting trade flows, and you're benefiting from that?
Absolutely, particularly from emerging market demand.
Does that mean emerging markets are better placed than developed markets right now?
I certainly believe so. It's that, historically, people always talked about that kind of east-west trade between Asia and OECD countries in Europe and China and the United States. But we're seeing a lot more of what we classify as north-south trade flows, with a lot of that global south economy benefiting from these shifting patterns from the Chinese and to a degree the Taiwanese and a lot of exporters from ASEAN as well.
So how did that story evolve? Was we to push into the end of this year, into 2026? Talk to us, and then given that context around the volume story. So you've said high single digits, low double digits. Does that continue?
It has looked like that so far.
What's your expectation into next year?
Yeah, I'm not much for predictions, but I mean, I think going towards the end of 2025, I'd like to say we're going to see the same growth rates. 2026, it really remains to be seen. But as far as emerging markets go, again, where we are focused, where ICTSI is predominantly focused, I think at least mid to high single digits is sustainable.
What does that mean for the businesses, for your earnings forecast for 2025 and 2026?
2025, I think will certainly meet expectations. 2026, again, emerging markets, you never know. But I do want to point out, the diversification that we've gone through over the last decade. And, if you look at a place like the Philippines, okay, you can discount that. You look at a place like the Congo or Madagascar, you can discount those. Put a basket of 30 ports together across 20 emerging market or 19 emerging market countries, and you see a lot less volatility, and you're able to take advantage of the consumption-driven trade growth that you get in these kind of places.
So, given that context, there's the relative resilience then.
Absolutely.
What are the biggest risks to the earnings forecasts over the next 12 months, would you say?
I think, look, a major global slowdown could still occur. We haven't had tariffs like this since, 100 years ago. So it really remains to be seen what the knock-on impact of that is going to be in the mid to long term. But I still believe, particularly with regard to our portfolio, that these markets where the demographics are crossing from kind of lower middle income to higher middle income, where you are seeing economies that have kind of skipped the manufacturing side of industrialization and have gone straight to services, you still see tremendous growth in consumption, huge demand for goods from Asia. And I think because of that, regardless of what happens, you will still see trade flows coming through.
You've been quite active in deal-making, Brazil, Batam as well in Indonesia. What have you got in the pipeline? What are you working on right now?
Still hoping to close a few deals in Southern Africa, very, very active in Latin America, and again, to kind of round it off, ASEAN, our home base, very actively looking at other opportunities there, not necessarily tenders, but rather private acquisitions.
Okay, Christian, thank you so much. I have 101 other questions, but we've run out of time. Really fascinating in terms of the touch on global trade and potential deal making as well in the pipeline. Christian Gonzalez, Executive Vice President of ICTSI, one of the biggest port operators globally. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We just want to give you an update in terms of some breaking news then. This being reported by Politico. The EU's 19th sanction package against Russia is no longer expected to be presented tomorrow. It's been postponed. That is according to Politico, citing an EU diplomat and a national official. EU capitals were informed late on Monday afternoon. Apparently, no details were given on when the sanctions would be unveiled. So we continue to keep across that story, of course, for you, as both the US and Europe mull additional pressure on Russia, given the continuing attacks, of course, on Ukraine and those drone interventions into NATO territory. Let's check in on some terminal charts right now. We'll move from geopolitics to what's happening in terms of the global rally on equities, particularly pronounced, of course, when it comes to the US. Fresh record high to the S&P 500, breaking 6,600, adding $14 trillion in terms of overall US stock valuations since April. The gains coming through then on expectations that the Fed is going to cut, on the relatively strong earnings momentum, on the AI momentum as well. How much further does this have to run? There have been some cautious notes coming through from some analysts saying that maybe once the cuts start from the Fed, you could actually start to see a bit of a pullback when it comes to this equity story. Let's flip the board and have a look at what to expect then from the data front here in the UK. Increasingly, economists suggesting that the BOE may just be on hold, and part of the dynamic is what's happening in terms of wages. So the white line is the average earnings picture, and we'll get the update at 7 a.m. UK time. But earnings have actually been relatively strong, as the blue line, which suggests and shows the tick up in unemployment. So you've had a tick up in unemployment, but those in work have continued to be able to command relatively strong increases in terms of wage upside. And that, of course, is a conundrum for the BOE as it tries to get inflation back below 4%, still around 4%, with a target at 2%, of course, and that outlier for the UK versus Europe. Let's flip the board and have a look at Alphabet crossing $3 trillion. There it is in terms of market cap. So joining the likes of Microsoft, Apple and Nvidia at above $3 trillion US. Part of the regulatory headwinds, of course, for Alphabet have been pushed to one side. And, of course, the developments around Gemini and its AI products really starting to gain momentum. So that seems to be what's feeding in to the upside that's come through for Alphabet. Again, crossing $3 trillion in terms of market cap. Bloomberg Terminal users, of course, can get access to these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. Coming up, the former UK ambassador to the United States, Peter Westmacott, joining us at 8:30 a.m. London time ahead of Donald Trump's state visit. Stay tuned for that interview and that conversation. That's going to be pretty fascinating on a huge week, of course, with the Prime Minister Keir Starmer. There's going to be deals in the making, pomp and ceremony, of course, with the King, and maybe some hurdles to avoid and dodge for the UK Prime Minister and the President as well. The opening trade, though, is up next. Stay with us. This is Bloomberg.